We just showed some of the pictures. I'm sure we're going to show a couple more pictures of these long lines, some gas stations without gas. How does that impact the entire U.S. gas situation?
Well, in a way, it makes life easier for the rest of the country because you're displacing, obviously, some demand there. They can't get the fuel physically to the stations via truck, and or the gas stations themselves have damaged infrastructure that they can't pump. So right now, the situation has been steadily getting better there in that Miami-Fort Lauderdale area. About half the stations remain without any fuel, but I would expect this situation to resolve within the coming week. But whenever we get these big storms, like when we had Superstorm Sandy or any of the other big hurricanes, they're actually demand destruction events, unfortunately, by their nature. So that actually helps to ease the supply situation, obviously, as opposed to when the hurricanes rip through the southeast. And we're in that season, or getting there soon, and they rake the production in the Gulf, or they rake over the refiners along the Gulf Coast. That's when the situation just sort of flipped.
All right, let's talk the supply situation. Let's start with oil. Of course, we have those OPEC supply cuts. We also have China ramping up, expected to raise oil prices, even though we haven't seen it. And we're also heading into the summer driving season. What's your outlook when it comes to gas prices from this point on?
You know, gas prices have been in about a 40-cent range. You just referenced the sort of ups and downs, excuse me, that we've been seeing. And I expect the range to persist. Look, this is the crunch period right now. We're in it. We're in it. The sort of run up to the summer gasoline demand season gets the market sort of on edge and pushes prices up ahead of time. Typically, Frank, though, once we hit Memorial Day, we take a look around and they sound the all clear in terms of supplies, then prices generally trend lower. So, you know, you just said we're at $3.60 a gallon about right now. I wouldn't expect much more to the upside. In fact, that we're probably going to peak here and continue to reverse and head back lower. Look, there's a lot of headwinds for this. As much as there's a lot of fear in this market, and there's a lot of talk about the sky is falling in terms of scary price predictions, the fact of the matter is we have significant economic headwinds. We have decent amount of supplies, and if you're really counting on OPEC Plus to come through with these announced cuts, the second round of which loom in May, I think it's you have a weak hand, because historically, Frank, OPEC Plus has never been good at cutting. Russia is desperate for hard currency, and the Saudis, too, want to compete for market share in Asia.
All right, John, I want to focus on the U.S. for a second. You have your eyes on Beaumont, Texas. Beautiful town, by the way. Good beach. I like it over there. But you're actually looking at what ExxonMobil's doing. What is that expansion? What could that mean for the U.S. gas market?
Well, we always talk about how we haven't built a new refinery in this country in decades, right? Well, ExxonMobil didn't build a new one, but they added substantially to the one they have in Beaumont. 250,000 barrels a day refinery addition has been inaugurated. It's online now, and smartly, ExxonMobil built it to use the production that they get out of the Permian, the very light sweet crude that comes out of that region. Most folks don't probably know that you get the Gulf Coast refiners in this country actually need heavier sour crude, can't really avail themselves historically of the Permian type of crude oil. Exxon is capitalizing on their position in the Permian and capitalizing now on this great, terrific demand we've been having for gasoline and diesel fuel, and the terrific refining margins that have persisted now since COVID.